Hi, Shae Russell here from ABC Bullion, and joining me today is our Global General Manager, Nick Frappell. Nick, how are you, mate?
Very well, thanks. Yeah.
It's been about a month since we last caught up.
Too long, yeah.
It has. Now, we've got a lot to go through today. We want to find out how your speech went at the Mineral Council of Australia.
Yep.
We want to find out what's happening with the Fed, because the Fed are meeting this week, and we're also going to make some calls on gold, or I shouldn't say we, I should say you. But first things first, I want to do a little bit of a recap on the Minerals Council Week of Australia, which happened in the first week of June. Now, I'm still quite bitter about this. Obviously, I'm from Melbourne. I was meant to be there. I couldn't get up there. So tell me, what are two of your key takeaways from the Mineral Council's week in Canberra in the first week of June?
Well, the first thing was the real concentration on sort of environmental and social responsibility. That's a really important thing that's being communicated by the mines and all the people who sort of exist in that supply chain, that sector. That was key. The other thing as well was that I saw a great speech by one of the RBA guys, Brad Jones, who gave a really, really interesting presentation on risk aversion and uncertainty post-GFC, and how, despite having really, really low neutral interest rates, there really hasn't been as much perhaps investment and growth as you might expect. There's been this wedge that emerged, and he gave a really interesting talk about how uncertainty has sort of dominated the last decade. I thought that was great, really interesting.
Oh, good. It's not often people say central bankers make interesting speeches. So
maybe I'm the lone one there that does that. But yeah, for me it was good. It was informative and interesting.
Now, speaking of informative and interesting, I know you always do give great presentations. So for those of us who couldn't be there, like me, as I said, I'm still sulking about it. Tell me, what was your speech to the audience at the Minerals Week?
I was really talking about those sort of two really consistent themes about gold pricing, real interest rates and debt. Well, three themes, I guess: real interest rate, debt, the US dollar. And of course, real interest rates and the US dollar is much more dynamic moving than debt. So one thing was, what do I think of real interest rates and so on, and also a little bit of what I thought about the dollar. Starting with the dollar, everyone's so bearish, but I was kind of pointing out that we might get a little bit blindsided by the dollar, and actually it might have a stronger year than perhaps anticipated. I could be completely wrong. But in a very dollar negative outlook, or a very dollar negative kind of dialogue or narrative, sometimes it's good to point out it doesn't always go the way that people expect. And there are some cases, particularly if you look at the dollar cycle, that actually might have just reached a recent low. 2021 might be a much stronger year for the dollar than people expect. So that's one thing. And the other thing is just talking about real interest rates. Got some targets that suggest real rates could go even more negative, sort of 150, that level. I think the recent low is about 0.85. And I guess, just in terms of the sort of inflationary pressures that people are talking about and observing, that would kind of make sense. If we got a little bit of a lift in inflation, that would tend to push, in the absence of any other factors, that would push real rates lower. So it was all about that, and just saying, look, how those things might pan out for the gold price.
We're going to move on to inflation in just a second, but that's really a contrarian viewpoint that you're putting out into the market, that the US dollar might be a better year for the US dollar than other people are expecting.
Yeah. And I fully expect to be wrong. I mean, that can happen. But when you've got a world where lots of people are saying, the dollar should be weaker, and there are very good reasons why it should be weaker, by the way.
Yep.
But sometimes, the book isn't the same as the play, so you get different outcomes.
I like that take on it, Nick, and I think we should definitely recap at the end of the year on what happened to the USD.
Yes.
Now, moving on. So the Federal Reserve Bank are meeting this week. So it's sort of an exciting week for, I guess, us market nerds, isn't it?
Yeah.
Now, let's talk about what we're expecting to hear from the Fed. Is there going to be any sort of chatter around tapering? And how does this impact the inflationary expectations in the US at the moment?
Everyone's going to be looking out for anything that people say about, or anything the Fed says about tapering. I suspect that there'll be very light touch on that, and they'll be very careful about tapering language. They might say something about what metrics they would use to begin the discussion about tapering. I think they'd be fairly cautious. They've been really cautious so far, and in sort of recent times, they've really been focusing on employment and lack of, and trying to bring the US economy back to speed with employment. they haven't really focused too much on inflation, despite some of the ugly data that's come out. I think they'll still be really cautious. Saying that, just prior to the Fed meeting, we did see a bit of a sort of some dollar short covering, and that's part of the reason why gold got a little bit dinged this week. So yeah, there's clearly positioning going on ahead of the meeting. I think they're still going to be cautious though. And the reality is what is tapering? How aggressive would tapering be, even if they, started it? Probably be quite gentle.
Well, this adds to your point that you're trying to make as well, is that they can't come out and tell the market they're going to taper straight away. They really must use that gentle language.
That could be carnage, potentially. Well, that's the one thing they don't want, is they don't want disrupted markets.
Yep.
So there's still scope for a little bit of a wait around tapering language, and also there's that other thing that we were talking about recently, which is the flexible average inflation targeting. That's the possibility of the Fed saying, well, look, we can let inflation ride a little bit if we think it's transitory in particular. And I think their language around inflation is it is pretty transitory. We wait to see the outcome of that.
All right, now, before we wrap up today, let's talk about gold. I love your phrasing before, how you said it got a little bit dinged up at the start of the week ahead of the Fed meeting. Now, we know US dollar $1,900 gold is an important psychological point.
Yes.
But, you've got some charts down there hidden in your chair pocket.
Yeah.
Tell me, what are you seeing when it comes to the gold price action? Where's the resistance? Where's the support? What are you looking out for?
So target-wise, if you look at stuff that's relevant for this week and maybe going into next week, then the targets on the downside, high 1820s, which is, perhaps not, it's not a big pullback. It takes us back to a lot of zones of support if you look at things via, say, Ichimoku Cloud. If you look at upside targets, which are being thrown out over the last 24 hours of price action, you're not seeing a huge amount. There are obviously some big long-term targets that have been in place for months and years. But if just talking about stuff to do with this week, you're looking at targets that take us back to 1903, 1906, back to that former resistance level. So that might help define the short-term range for gold. 1830, 1900 kind of level playing out. Of course, somewhat dependent on the language that the Fed comes out with post the meeting. So that's how I would see it. But you might see a little bit of volatility. That would be the kind of range I'd be looking for. Dips are pretty swiftly bought, but I still think there's scope to explore the 1830s.
Look, Nick, I absolutely love talking technical talk with you about gold, but unfortunately that's all we've got time for today. So we'll need to wrap up.
Thanks.
Nick, thank you very much for joining me.
Cheers.
And thank you for watching. Thanks for watching. Make sure you hit like and subscribe, drop us a comment, and we'll catch you next week.